Hey everyone, thanks for checking out this video today. I want to make sure that you're in the right place. This video today is going to be about the purchasing of foreclosures. It's not going to be about how someone winds up in foreclosure, although I'll touch on that quickly. It's also not going to speak to the number of potential foreclosures are maybe on the horizon due to higher interest rates. This is strictly based off of my experience selling foreclosures on behalf of banks and lenders, and what that process is going to look like for you as just a home buyer, as like a mom and pop investor, or as a renovation company, or someone that might be interested in buying a foreclosure. My name is Andrew Jones, and I'm a real estate agent in Calgary, Alberta with CIR Realty, and I've been selling foreclosures for a couple of years now, and I wanted to make this video just to explain a little bit about the process of purchasing a foreclosure and sort of who that is actually for. I think there's a lot of misnomers out there about what a foreclosure is, or maybe the opportunities that a foreclosure would give you. And I hope that in this video, I'm gonna shed some light on that for you. First things first, lenders and banks do not want to foreclose on people. They are in the business of signing you up for a mortgage for 25 years and charging you interest and making their money that way. They do not want to make people homeless. They want to make their interest. So you can look at that as optimistically or pessimistically as you want to, but at the end of the day, they're not being evil. You have signed a contract to pay off that loan, and in doing so, you're going to owe the bank interest. If you do not pay your mortgage, you will be foreclosed on. Your asset, the home, will be taken from you. Now, this doesn't happen overnight. This is a long, drawn-out process. The lenders, like I said, they do not want to make you homeless. They want you to be paying your mortgage and paying that interest. It takes months and months and months of delinquency to end up in foreclosure. Another reason why I see sometimes foreclosures hit the market or that come across my desk is people that have passed away, and maybe they don't have instructions in their will as to what to do with the property or who the property is left to, and there's still a mortgage owing. Now, that could be lines of credit, that could be a reverse mortgage, there could be any sort of number of items on the title, but at the end of the day, if there's an amount owing and no instructions as to what to do with that property after somebody passes away, it will go to the courts to be sold. That balance will be paid off to the lender, and then usually the rest of the proceeds will go to the family estate. I think possibly the biggest misconception about buying a foreclosure is that you're going to get it at an absolute steal of a deal. I've sold quite a few of these over the last few years, and just like we've seen in sort of the private sale market where prices are skyrocketing, we still see that with foreclosures. We still see the multiple offers. We still see bids driving one another up. And at the end of the day, these properties do end up selling for market value. Now, oftentimes they are distressed. Oftentimes they're not very well taken care of. They're very outdated. And so they're not necessarily going to be selling at peak market value, but there's no way for you to grab a foreclosure at a 30%, even 20% discount. That opportunity just doesn't exist. The lenders and the banks know the value of the property, and at the end of the day, they also hire a real estate agent like myself to sell these properties and to make as much money on the sale as possible. So the big thing is, there's not as much of a deal to be had as a lot of people think. So when we sell properties privately or on the MLS, the seller has certain things that they need to disclose about a property. They are responsible to disclose things about a property. If there's any material latent defects, right? If there's anything that is hidden that you can't find on a reasonable inspection, that is going to significantly affect the value of the property. So if they know about sewer issues, if they know about roof leaks, if they know about a fence that's not on their property, items that can be costly to remedy, there's a responsibility to disclose that. When you are purchasing a foreclosure, none of that exists. Because the lender is selling this property and they typically know nothing about it, they're saying you have to assume all that risk. That's what we call as is, where is, or more commonly referred to as like a buyer beware. Sometimes you'll be able to do a property inspection Oftentimes, the lenders won't even allow that. If you can do an inspection, the best you'll probably get is what we call a dry inspection, because usually these properties are winterized, all the water is turned off, and they're not going to turn the water back on for you. So again, we don't know if there's plumbing issues, we don't know if there's foundation leaks, and that's up to you as the buyer to be prepared to take on that risk. What's the kind of person that would be willing to take on this risk? Typically, it's not going to be a first-time home buyer. It's not going to be someone that doesn't know which end of the hammer to hold. It's going to be somebody who has done a lot of renovations, has tackled a lot of projects and a lot of problems, has a lot of experience, because at the end of the day, you never really know what might pop up. Again, whether it's property line, fence, retaining walls, roofs, attics, insulation, drainage, foundation, plumbing, electrical, sewer, like any number of these things could pop up and cost an additional thousands of dollars, which is why we typically don't say that these foreclosures are for sort of the retail purchaser, whether it's your first property or even your second property looking for a quick flip. You really need to know what you're doing to get into a foreclosure. You're definitely possibly jumping right into the deep end with foreclosures. Now, sometimes you might get lucky and these properties are in fantastic shape. The thing is about that, a lot of people are going to see that too, and you're going to have multiple offers probably in this market at least. And again, that property is going to sell for what it's actually worth. When we see the properties that are falling apart, there's holes in walls, appliances are missing, those are typically the ones that we are reserved for general contractors, professional flip companies, or someone that just knows exactly what they're doing, loves the house, loves the location, and says, hey, I'll take on this responsibility and this risk. I'm gonna live here for 25 years with my family. I'm willing to, take on whatever comes and deal with it as I have to. As is the case with most foreclosures, they're actually called court-ordered sales. So the court is ordering the sale, meaning that the courts are actually going to be the ones that accept this offer. So when you submit your offer, it will actually go in front of a master in chambers, and they will make the final decision on which offer to accept. Surprise, surprise, it's going to be the offer that's the highest price, okay? All of these offers need to be unconditional. Because of everything that I talked about on the condition of these properties, you can't write with a home inspection condition, because if you find anything, they're not going to give you any money off for it. So no home inspection conditions. In fact, no conditions at all. You can't have a financing condition, no sale of buyer's home condition, nothing like that. When these offers get in front of a master in chambers, they need to be totally clean and ready to rubber stamp and accept, meaning that the deposit has to be in and the offer unconditional, so that the day that it goes through court, the offer is accepted and boom, you've bought the house, usually about 2 or 3 weeks after the court date. That's another risk too, right? Is these unconditional offers. Typically you get a 2-week period or a 10-day period to satisfy conditions like a property inspection. You don't get that. We talked about that. But the other big one is financing. You can have a mortgage on a foreclosure, but your lender's gonna wanna know that you're purchasing a foreclosure. So typically how this works is a lender's gonna get on a pre-approval is gonna get you maybe 60, 70% of the way to a full approval. And then once you write your offer, you submit the property details to the lender, and then they get it the rest of the way. With a foreclosure, you're gonna have to tell your lender ahead of time, hey, I'd like to write an offer, unconditional, on a foreclosure. Here is the property. And they're gonna get your financing 99.5% of the way done. Because again, it's unconditional and accepted immediately. So we need to know for sure that you as a buyer are approved on this property, and also given the condition that it's in, whether or not your mortgage company, whether your lender or bank is actually going to loan on this asset, because often they are pretty distressed. So after you're all wrapped up in court, the master in chambers has stamped your offer, it has been accepted. It takes a few weeks for documents to get through the court systems. It's speeding up post-COVID, but it's still a little bit slow. Also in that time, your lender is going to fund the mortgage. The lawyers are going to deal with that as they would with a typical home sale. Your possession's probably going to be about 4 weeks after that court date. Now, the big thing here with a foreclosure, going back to having no representation or warranties from the seller. On possession day, there's no guarantee that your property is going to be in the condition that you viewed it in when you were showing the property. So that means that there could be some broken windows. There could be additional damage due to the leak in the roof. There could be missing appliances. But at the end of the day, that's part of that buyer beware as is. Whereas it really is, it's a risk. It's a really big risk, and that's why we don't advise people that are new to renovation or development to get into this first. Okay, because we have seen on possession days, break-ins that happened a couple weeks earlier. Some appliances are missing, windows are broken. Now, these properties are managed by a property manager, so there is someone looking after the home, but at the end of the day, they're vacant. They usually have been vacant for a long time, and they sometimes can be targets for terrible things like squatters or just petty crime, theft, and that kind of stuff. So that's another big thing too with possession day, is that the home is as is, where is, and there's no guarantee that the home is going to look exactly the way you saw it on possession day. Another big thing with that is, depending on the situation of the previous owner, they may have left all of their belongings behind. And chances are they've taken everything of value. So you're going to have old filing cabinets, tube TVs from the 1970s, old couches. I've seen all sorts of nasty stuff in these foreclosures. It's typically all left behind, and that's for you, the buyer, to deal with and remedy as soon as you take possession. So when you're budgeting for your project, not only are you thinking about all of the cosmetic and maybe structural things that you need to deal with, but you're probably going to have to budget a couple $1,000s for just removal of the previous belongings, because junk removal is not cheap. And usually, not always, but usually when someone is foreclosed on, they end up just taking their valuables and leaving all the crap behind for the next person to deal with. So that sums it up pretty much. I hope that's a decent summary of the process of purchasing a foreclosure. At the end of the day, the biggest things to remember is that you're not going to get the deal that you maybe thought you would. And the second thing is that you need to be prepared financially, and then also with your skill set, to take on a lot of risk. A lot of unknowns, a lot of things can rear their ugly head when you least expect it. But at the end of the day, there can be some value in purchasing these distressed homes. If you are a developer and you're looking for land, oftentimes we'll just see these houses get torn down and then, to get built in their place, depending on whether it's an inner city location or further out into the country. So yeah, hopefully that helps. Hopefully I've answered some of your questions about how buying a foreclosure works. If you've got any more questions for me, just leave them in the comments below. Like I said, I do sell a fair amount of foreclosures every year. And if you want to be added to, I have an ongoing list of people who are interested in foreclosures. If you'd like to be added to that list, shoot me a message as well, and we can set that up so that you see any new foreclosures that come across my desk in the near future. Again, my name's Andrew Jones with CIR Realty. Thanks for watching this video. If you've made it this far, give it a like, subscribe to my channel. I try to put out as much content like this, mostly informational, mostly just trying to help people understand real estate, whether it's investment, buying, selling, all that kind of stuff. Basically just here to help you out if you need it. Again, thanks for watching and have a good one.